after Pillar 1, Pillar 2, Faceless Assessments, now we move on to the last technical session, which is around return scrutiny, audit assessments, implication of GST on international tax, international trade, so all around IDT. And for the session, I would like to invite our moderator, Sandeep Chelana, Managing Partner, Chelana & Chelana Law Offices, Harun Sir, Vice President Taxes, Genpact, Alok Parikh, Head of Tax, Discovery India, Lalitendra Gulani, Partner, Nantam Legal, and Saket Patavri, Executive Director, Indirect Tax at Next Time. Thanks to all of you for agreeing to be here with us. I would request you all to please join us on the dais.
Saket, chalo.
So quick background on this team panel that we have. Sandeep Chelana is a 2005 law graduate and has been practicing IDT since 2008. He specializes in tax planning, advisory, and litigation support services, primarily in the areas of indirect taxes, inter alia, including GST, customs, excise, erstwhile service tax, and VAT. Thanks, Sandeep, for joining us today. On his left is Saket Patavri. He's a senior director with Next Time and leads the indirect tax practice. He takes care of the litigation, corporate and consulting, all aspects around IDT. Extreme left on my side with Harun Qureshi, sir. He's a chartered accountant by profession, having over 30 years of experience in the fields of finance and taxation in financial services, ITS industry. Thanks, Harun, sir, for joining us today. Alok Parikh on the right side of Harun, sir. He's a qualified chartered accountant, CS LLB, with around over 10 years of experience in the field of taxation, both direct and indirect tax. Thanks, Alok, for joining us. And Lalitendra Gulani, partner at Anantam Legal. He holds rich experience of close to a decade in the fields of indirect tax and international trade. He regularly advises Fortune 500 companies on various tax matters. Thanks to all of you, and over to you, Sandeep.
Thank you, Ashish. Thank you, everyone, for taking out time for this session. There are various critical issues that the industry is facing today in GST, even after 5 years and more than 5 years of GST coming into force. And lack of clarity is something which has burdened the companies with additional cost of compliance and litigation. We'll try and cover some of the most important and critical issue that the industry is facing today. And to start with, I think one of the critical issue that most of the international as well as domestic companies are facing is with respect to intermediary services. Now, various BPOs, IT, ITS companies as well as other companies which are providing either marketing support to their parent companies or in any other manner providing managerial support services face a challenge where the services provided by them are alleged to be intermediary services by the GST authorities. Now, in this regard, I think I'll start with Mr. Qureshi because his business also is very close to the kind of challenges that the GST authorities raise. So, Mr. Qureshi, what is this concept of intermediary for the audiences to understand, and what is the correct legal position around the intermediary services? And where are the challenges that the industry is facing around intermediary services?
Thank you, Sandeep. So, intermediary services as a concept came in 2012. I think before that the concept did not exist. And I would think the way it was brought in, and if you look at the definition, strictly speaking, it should really apply to brokers and commission agents. Now, of course, over time, the revenue authorities have tried to expand the definition and try to cover various services which are strictly not even close to being brokers or commission agents. But that's where we are. So this came in 2012. There was an education guide which actually laid out some useful guidelines on how this should be interpreted. I think things were going pretty well. There were isolated cases of basically exporters of services being regarded as intermediary, but fortunately many of the CSTAT judgments went in favor of the companies. And then GST came in 2017. Now interestingly, the definition of GST, of intermediary as per GST law was exactly the same as the definition in the service tax law. However, with the advent of GST, the tax authorities, at least in a few cities, and Gurgaon being really one of them, started reinterpreting the definition and basically saying that any three-party arrangement amounts to an intermediary. So actually, if you look at the definition, I will not go over the definition, I'm sure all of you have seen that. But actually, if you look at the definition of intermediary services, any principal to principal arrangement, even a subcontract arrangement, is really outside the ambit of intermediary. While it is sort of inclusive, it says also says by any other name called, but I think you have to really see it within the context of where it's coming from. There was a circular, this litigation started, there was a circular issued in 2019. The circular actually created more confusion. Industry objected to that. The circular was withdrawn in a few months' time. And then thereafter, nothing happened for 2 years. There was a lot of lobbying happened by the industry, but nothing really happened for 2 years. Litigation kept on piling up. I think September 21, finally a very good circular was issued. It covers the issue very comprehensively. It clearly says that a subcontract is not in the nature of intermediary. That was issued. I think, however, the litigation just continues. In fact, it has just gone up after that circular was issued. So there are cases pending in the High Court. I think High Court, while the CSTAT had given some very favorable judgments for taxpayers, I think the matter under GST has just reached the High Court. I think Punjab Haryana High Court has reserved judgment in one of the matters. So we'll have to see how this settles down. But as of now, I think we are really seeing on the ground a lot of efforts being made by tax authorities to really push the envelope and try to bring in a lot of services within the scope of intermediary and deny the export benefits.
Right, sir. And in fact, in the recent past, sir, as you said, that while the intention of the circular was to reduce the litigation, in fact, the authorities have started using that very circular to interpret it in a manner where even the subcontracts to Indian subsidiaries are being deemed as intermediary on the account that they argue that because there is a control on the subcontractor as to how the services are to be performed, they will qualify as an agency. In any case, obviously there are even more challenges when it comes to software industry. Thankfully, as you sir rightly said, that CSTAT has been very understanding on the issue. I had an opportunity to argue a case which involved reselling of softwares, which is a concept which otherwise usually is not appreciated. And the CSTAT held that reselling of software on your own account is a principal to principal services. Even though the license of that software, it was a Microsoft software there, was directly moving from Microsoft to the end user. And the court held that it would not qualify as intermediary services. So courts obviously will have to at the end of the interpret these issues. But my question then, sir, would be what precautions should the industry keep in mind while entering these agreements? And Mr. Qureshi, again to you, especially intercompany agreements with respect to either provision of services or subcontracting a portion of, say, software development kind of services, to ensure that these services are outside the risk of being treated as GST. Are there some parameters that the industry can keep in mind to avoid these challenges?
So I think, honestly, I think it is a little difficult to sort of look at a crystal ball at this stage and really say, because we don't know how the High Court will interpret this. Hopefully the High Court will pass a very detailed and speaking order and lay down guidelines on what should and what should not be intermediary. But yes, I understand that obviously things cannot be at a standstill while matter is in courts, and even if the High Court does reflect on this, there is a possibility this may ultimately travel to Supreme Court, which may have its own timelines.
Correct.
But in the meantime, and I was just reflecting on this, I think certain precautions can certainly be taken, which really stand out as certain things maybe the industry never focused on. I think it was always regarded as if the intermediary is something which cannot happen to us. But it actually, the definition started off with commission agent or broker, and people thought that maybe we are not commission agents or brokers. No one actually ever thought about this. But I think, yes, of course, going forward, what we should really look at is, I think our agreements should clearly say, and especially if those agreements are with intercompany agreements, because that is what the revenue authorities are really attacking. Agreements should clearly say that this is a principal to principal arrangement. And while it may be, it can be a subcontract agreement, and thankfully the 2021 circular clearly says that a subcontract cannot be intermediary. But I'm sure it will be very helpful if the agreement not only says it's a principal to principal agreement, but also if you look at the clauses of that agreement, I think those clauses should also bring out that kind of relationship. For example, many of the subcontract agreements, especially because these are between affiliates and between the Indian company and the US parent, a lot of clauses get built into this, which require the US parent to exercise a lot of control over what is really happening in India. I think that is something which some of the authorities are really trying to question, that how can you be an independent principal to principal service provider if there is so much control happening. So I think that is something we should really look at. Of course, we have to safeguard the interests of both the parties, but within that, we should try to make this as arm's length as possible.
Right, sir. No, very helpful. Alok, Saket, Lalitenji, any other precautions which you think can be taken to ensure that the transactions which are otherwise reselling services or reselling of goods on principal to principal basis are not considered as intermediary services? So, Lalitenji, anything from your side?
Yes. In our practical experience, what we have seen is that practically speaking, there is even if you might take any of these precautions, at the end of the day, the adjudicating authority, what he sees is that if there are three parties involved and there is supply of goods, whether through that agent, whether through the Indian entity or bypassing the Indian entity, at the end of the day, they end up raising this issue of intermediary services. And equally glaring is the scope of the OIDA services, which always remain in contention. But what I find is that usually all of these agreements have a clause which state that the activities that the entire agreement that has been drafted between the Indian entity and the foreign parent is on principal to principal basis and not on the Indian agency. The Indian entity does not qualify as an agent. But increasingly the courts and the tax authorities have brushed aside the nomenclature test and gone to the pith and substance of the agreement. Now, when we see the pith and substance of the agreement, it must reflect the reasoning of Section 182 of the Contract Act. And Section 182 primarily relies upon the fact whether the Indian entity is able to formulate any legally binding obligation for the foreign parent or not. So, in addition to whether these activities being carried out at arm's length, one very important factor would be that all of these agreements contain relevant clauses which ensure that Indian entity does not end up carving out any legal obligations for the foreign parent. And of course, there are certain areas which always remain to be in dispute, whenever probably an Indian entity is engaged in the deciding the prices of the commodities at which the foreign parent will be selling. That is definitely an area which will definitely raise the eyebrows of the tax authorities. Primarily it should be that the concept of agency as envisaged in section 182 of the Contract Act should be absolutely conspicuously absent from the agreement.
Sure. Thank you. Yeah.
One point I wanted to make here, I think both my colleagues referred to that. I think one of the things which is very important is your consideration should, whatever you call it, it should not be structured as some kind of commission that really the Indian company is earning. It should not be linked as some percentage of some revenue or something. I think that actually weakens your case.
Correct. Sakil, anything you would like to add?
Few things. In fact, intermediary, the tax authorities are taking it to hilarious levels. I was arguing a matter before an appellate advance ruling where a liaison office of a chamber of commerce was considered to be an intermediary, and all the cost recharges was considered to be a consideration for an intermediary services. It blew my mind how on earth can this be considered to be an intermediary, but that's the level of that they are going. Now, while the transactions, if it's one is your basic transaction should be kept in mind and the agreement should be exactly in sync with basic transaction. In a lot of cases where it is very clear it's not an intermediary, for example, the example that you gave of reselling of software, etc., probably at some level will win the case, maybe at a later appellate ruling, and it will get settled. One of the most important criteria or important kind of situations that we should keep in mind is, indeed there may be many transactions or a part of transactions which may qualify to be intermediary. For example, if someone is outsourcing the global procurement to say maybe a subcontracting into India to a subsidiary for a global procurement. Now that is something which still can be considered to be an intermediary, but what you are essentially doing is you are supply is not happening to India, maybe some in country A and country B the supply is happening, and you are just trying to identify the best prices and doing them, and so you're negotiating the contracts, and plus you are also undertaking all the backup work also, which is issuing the purchase order and then ensuring the supply happening. Now these kind of transactions, some part of it or all of it may qualify to be an intermediary. So what we should essentially look at is what is the transaction, and in case in an agreement where some part of it indeed is intermediary, it's always better to split the consideration into these two parts so that your exposure is only one portion of it. Otherwise what will happen is they may make the entire supply to be a composite supply or a mixed supply and ask you to discharge GST considering this to be an intermediary. So it's very essential that we actually look at the transaction and accordingly draft the agreements, and if there is a split which can be done, do that split and offer tax on the split, which is actually a case of clearly an intermediary, so that it will basically ring fence us for unnecessary litigation and we have discharged the tax.
That's a very good point, Sakit. In fact, in the practical examples we have also seen that marketing services, licensing services, customer support services, and all of these services which a subsidiary provides to a parent company outside India are merged into a single service agreement. Some of them may clearly fall within the definition of intermediary, and therefore the whole agreement becomes subject to the litigation. So it is always better that the intermediary part is kept outside in a separate contract, so that at least the all other market research related services or brand building related services, etc., can still be argued to be not intermediary. So
sorry,
just one second, let me just in addition to all the precautions, one or two came to my mind while you were talking, and I think they may be important. One obviously is, if the Indian subsidiary is a reseller of service in a sense, and it has the ability to decide the price of the services on its own without any influence from the parent company, and at least the agreement says so, as well as the fact that the obligation to recover the money is of the Indian company, and bad debts with respect to any recovery are the problem of the Indian company, that also goes on and helps to establish that they are principal to principal. So these are the two things that came to mind, I thought I'll share.
Sandeep, I have one point to add.
Sure.
Yeah, so Alok, you mentioned that beyond the agreement, the tax authorities today have the capacity to unravel or basically seize all of our laptops also, and they might basically contain incriminating points. Now, one very interesting point that I feel that kind of emerges is that one very standard way of securing this entire situation that many of the people adopt while drafting all of these contracts is that by inserting a specific provision by inserting a specific clause in the agreement itself, which says that anything outside the agreement shall not have any implications or bearing on the agreement itself. Now, interestingly, when we see the GST law, it somehow it does not talk about arrangements as it is talked about in the transfer pricing provisions under the Income Tax Act. Now, when we talk about the transfer pricing provisions under the Income Tax Act, now the definition of associated enterprises, it is not merely restricted to, it is not restricted to the agreements that have been forged between the parties. And they go on to cover arrangements, and the courts have on various occasions held that even actions which have been undertaken in tandem can amount to an arrangement under the Income Tax Act for the purpose of, for that purpose. Now, when we talk about GST, as far as my knowledge goes, there is lacuna with respect to the jurisprudence on this issue. Okay, how would you deal with these kind of scenarios wherein probably actions are being undertaken in tandem, and the contract basically very clearly provides that the arrangements outside the agreement will not have any bearing on the nature of the transaction being executed?
Sure, very good point, Lalitanji. Obviously, in absence of, number one, whether because there is a specific provision under transfer pricing laws and there is no similar provision under the Indian GST laws, would it refrain from the GST authorities to still allege that the substance over form of the agreement is different, and therefore your form of the agreement may be something else, but the substance of the transaction is different? I think the authorities are, have been successfully arguing this now, that irrespective of what your agreement say, if the real substance of the transaction is different, they are free to interpret it in the manner that they deem fit. Moving on from this, in the interest of time, I think the second topic that we wanted to cover today was around the increasing number of audits that have started in GST laws. Now, obviously, there are audits, there are ASMT 10s, there are other notices that are coming with respect to reconciliation, etc. Now, in recent past, we have analyzed that during these audit proceedings, the tax authorities have started seeking information which to a great extent are impractical. For instance, the authorities say that they would want to have a trial balance for each of the location, or at least even each of the states, which the company may not be maintaining in usual course. Similarly, there are other information that are sought by audit teams which otherwise may not either be practical or not maintained in usual course of business. So how do we deal with such requests from the audit authorities, and what are the obligations of the taxpayers in this regard? Mr. Qureshi, if we can have your views on this.
The provisions relating to maintenance of accounts under the GST, actually there is no specific requirement for any registered person to maintain trial balances for each of the GST registrations separately. However, as you rightly said, I think this is now the favorite topic, favorite question that almost all companies are really facing across the country. There are multiple requests coming in, and when you try to explain that we do not maintain these kind of location wise, there is no requirement to maintain it, it is actually seen as some kind of you are stonewalling a request. Why don't you maintain this? You should have maintained it. So I think that's a lot of industry is actually facing that. A lot of advisors are sort of trying to work out solutions, discussions are happening with the tax authorities, but as of now, I have actually not seen any audits closed where this issue has been dispensed with. I think if you look at it, the relevant provision is that each taxpayer should maintain true and correct account of inward and outward supplies, taxes paid, ITC availed, and all of invoices raised and all of those things. And if you look at the way the GST annual returns are filed, they already carry a fair bit of information. They are already very detailed. They already carry a lot of information which can actually help the tax authorities in complete whatever audit they want to complete. I don't think there is even any need for a location-wise trial balance. I don't think it is really going to help anything. I think the tax authorities, in some cases we have tried to really engage in a discussion and understand under which provision they are coming, they are trying to say that under section 71, which is really concerning access to business premises, they are saying that we can ask for any document in your business premises which is required for the audit. Now, our point is that all those documents we are happy to share with you, but all those documents are maintained at a legal entity level. They are not maintained and they are not required to be maintained at a registration level. So, I think that is where somewhere, I think this is something which has not yet seen a final resolution. I think once this audit reports start coming in, we'll figure out what happens, and then I think going forward, industry will really have to think through that in our ERP systems, is there some way we can address this kind of requirement if the requirement does not go away. And I also think I think it is high time that CBIC should issue some kind of clarification on this. Because at least under the existing provision, this is not really a mandatory requirement.
Correct, sir. I think, in fact, the service industry is the most hit because, maybe the trading industry or manufacturing industry was used to getting the VAT assessment done. And in the VAT assessment, obviously, the requirement of having the trial balance was so accepted that they had moved into this this practice of maintaining it state-wise. But for service industry, in any case, it is so impractical when the expenses and procurements are happening at the centralized level that it is a big challenge. Alok ji, how do you think these requests should be handled? So one, obviously, there are multiple requests coming from multiple officers. The state GST anti-evasion guy is coming asking for something. ASMT is already pending. In fact, we saw a case where ASMT 10 on the same issue has been issued. Now state GST wants to investigate and DGGI also wants to investigate on the same issue. Plus there is this audit that is happening in which this question will also come. So 4 different authorities looking into the same information, asking for same information. How should this be addressed, and whether there is any reprisal in the law itself where I can request that I will only give information to one. So obviously, one is that you go start fighting with the authorities. 2 is that you comply with it. But there are other nuances with respect to this. Say for instance, I was issued an ASMT 10, and an ASMT 11 was issued where my submission was accepted. Though it would not have, I have at least not seen any ASMT 11 being issued. And then DGGI also wants to come in, obviously, with some additional information which they may have figured out during the investigation. From a larger policy perspective, with respect to consistency in education, reduction in compliance, the idea of GST was very different when we invested crores and crores of rupees in technology to move to GST. So from a larger policy perspective, Saket, Lalten or Harun sir, anything you think that this is something which government needs to pay attention on? That was not the way we intended that the administration of GST would happen. And whether technology can be used in a better manner to address whatever concerns government may have with respect to any transaction.
So maybe if I can take this up. One is certainly the reason why we have too many officers. In fact, what it beats logic. Why should you have for one tax And now since we have only one nation, one tax, so many officers having concurrent jurisdiction over it. It's only because maybe the government also does not trust the officers, either their competency or otherwise. And hence they have, had parallel officers so that if it gets missed by one, there is another one. If it gets missed by another one, it's the third one. Second, obviously because there is a merger of two taxes, there are state and central level officers now. They both are, looking at the same transaction the same manner. Earlier it was VAT and excise while it was relating to goods, but their scheme was different. So that's why we have so many officers. Now, having said this, I think there is a provision which says that if a central government officer, if the central government has seized jurisdiction over a particular issue, then the state or vice versa cannot take the jurisdiction. So therefore, there is some mechanism in law which prevents, if already something is taken up by one kind of officer, because central and state both administer the same transaction, then the other one cannot do. So there is always already a provision. However, having said this, when you see practically in a, while for example you gave example of audit. Now in an audit scenario, okay fine, this finding has come and ASMT 10 is issued and you know what the issue is. But the moment investigation starts, the officers are not supposed to, or they do not in any situation divulge what they are investigating, right? So they will ask for information, they will ask for documents, etc. Now since they have not informed that what they are investigating, how would you actually prevent them by resorting to this provision that look, you are doing the same thing? Only if once they conclude, then only you can say, once the entire thing is over of investigation or this thing, then only you can go back and say, look, you have already, this is already ASMT 10 issued. Then probably he may not undertake work. So therefore, what can be done here is, we can just upfront inform the officers, like this is ASMT 10 is already issued if you are looking at this transaction, and probably they'll seize off the matter and then they'll not proceed ahead. If they want to proceed it, then I don't think currently there is any choice. Only option probably could be if it escalates to a very high level, you may, and the stakes are high, you may go and writ.
Right.
There's one more point that needs to be noted. Now, the CGST Act and the GST law, the provision only says that if the central tax authorities are seized with a particular subject matter, then state tax authorities cannot take upon that matter, investigate that matter. Now, Alok, in your points, you pointed out that even the central tax authorities have different wings. There is one investigative wing and there is one executive wing. Now, executive wing and then there is audit wing. The audit authorities have probably already issued an audit notice on a particular subject matter. The issue arises, can you stop another wing of that particular tax authority only from basically proceeding ahead with the same subject matter, as you pointed out. Now, interestingly, there was recently one interesting judgment on this very issue. And what the High Court held was that at the end of the day, even if the provisions of CPC are not basically borrowed as it is in all of these GST laws and all of these specialized fiscal laws, but at the end of the day, one very essential principle of CPC is that adjudication, the controversies, the disputes, the litigations ought to be minimized. So if a particular dispute has, even if there is absence of a specific provision, I think we can still continue to rely upon the general principle which is there in the CPC to argue that if a particular subject matter has already been taken up by the audit authorities, then investigative wing ought not to take up that subject matter all over again. And the court allowed the relief in that particular case.
Correct. And in fact, the recent trend is that the audit takes up an issue, tries to get the money deposited. If they think that the company is not willing to deposit the money during audit, then they send DGGI. So now you will have to deposit. So DGGI has become a tool to, get the money deposited even when there is a reasonable scope of interpretation involved. And we'll discuss that in detail when we come to search and seizure and how to handle these requests. But before that, we'll move on from this. Harun sir, anything else you would want to add on this on policy level?
No, just I think a brief comment I would have here. I think So if you look at it, the revenue authorities already have huge information with them. There's a very detailed GST annual return. They call for all kinds of information during the audits. They call for income tax returns, tax audit reports, master pricing reports. There's already so much information. I mean, even if they insist on getting location-wise trial balances, I'm not even too sure. I mean, it will involve obviously a lot of time getting wasted at all ends with people trying to reconcile what's appearing here versus there. I'm not sure ultimately what is going to really, what will be the benefit to the tax authorities.
So on that, sir, I had an opportunity to discuss this with someone in the government, and the idea that was suggested was that it's been 5 years, but nobody has now gone into the consumption principle of GST. That where the consumption is happening and therefore which state should have received. Once you start preparing the local state-wise trials and making it a profit center, you will therefore correctly account for the expenses pertaining to that location where you may not have paid the tax because the procurement may be happening at a head office level. So in fact, the trial balance would lead to various other challenges where states may have infighting as to which state needs to get this tax. So moving on, the third topic today we have is with respect to secondment arrangements. And obviously I am sure all of you would be aware that recently Supreme Court gave a judgment in Northern Operating, though in the context of service tax laws, where interpreting the secondment agreement in which was involved in the case, the court concluded that the employees that were seconded in India were actually employees of the foreign company and were rendering services on behalf of foreign company to the Indian company, or were providing manpower services, and therefore the Indian company had the responsibility to pay service tax under reverse charge mechanism. Now obviously this judgment was given in a particular context in respect of an international transaction. The important question that arises is what would be the impact of this ruling, number one, on the overall secondment arrangement, number two, would it have any spillover on the GST? So no, I completely appreciate, and obviously yes, High Court, Supreme Court in this specific facts of the case said that the employee was bound by the policies of the foreign company, there was a lien on the employment, etc. But Lalitenj ji, does this mean that in all cases of secondment, the Supreme Court ruling would hold that there is a liability to pay GST or service tax, or there is some nuance that we need to understand around it?
Yes, so that's a very interesting point. Now, when we read this entire judgment, we give this judgment a very thorough read, 2-3 times, I think. Only after that we realize that this judgment basically does not. It provides for a lot of tests. First of all, there are 7-8 tests that have been talked about: control test, 3-tier test, salary dispersal test, integration test, and economic reality test, and all of these tests have been talked about. Now, this judgment, to put it succinctly, in my opinion, this judgment does not basically say that in all cases, if the services of an employee have been loaned to the Indian entity, that means that where after the period of secondment ends, where the employee goes back to the foreign entity, goes back to the original employer, it is not necessary that in all those cases the Supreme Court judgment of Northern Operating System will become applicable. We still need to see a lot more nuances. For example, one very interesting point that this basically entire judgment talks about is that first of all of these agreements, these agreements were very beautifully drafted. The agreement of secondment, if you see, it very clearly says that the risk and reward associated with that employee will also reside with the Northern Operating Systems and not NTMS, which is the Northern Northern Trust Management Services. And the salaries, even though they were being disbursed by the NTMS, but at the end of the day, they were being disbursed on cost-to-cost basis. And they were, the NSO was basically reimbursing the entire cost, and NTMS was charging a 1% administrative fee, which indicates that it was rendering payroll services sort of activity. So at the end of the day, there were a lot of factors which were there in support of the taxpayer also. But then what the Supreme Court has said is that they have sort of tried to apply a doctrine wherein they treat an associated enterprises, a group of associated enterprise, probably as a single person. Now, at the end of the day, what they say is that there is one entity, there is your parent entity asks you to provide certain set of services. Then by asking you to provide those services, they end up creating a requirement for having a specialized staff also. And then in order to fulfill that necessity also, they provide you with the necessary staff. And even so, if we see the agreement in that particular judgment, it says that the profits of the company of the Northern Operating Systems were restricted to 15% and not more than that. So at the end of the day, what they say is that you are not the Northern Operating Systems, that is the Indian entity, is not able to derive the necessary profits from its own set of employees. Now, now even as per today's economics, all of the transactions are priced on the basis of cost plus profit method, but over there they came heavily down upon the fact that it was one single group of entities that were being engaged, and the Indian entity was merely providing services to a associated enterprise. So when we talk about a normal case scenario that we ordinarily see in case of in a lot of companies, is that we'll have an Indian subsidiary of suppose an automotive giant, Japanese giant, and that particular Indian entity would have seconded employees of the parent entities. Now in all of these scenarios, the Indian entity is able to derive the profit out of the employees that have been seconded. It is the Indian entity which basically decides the pricing of its products and sells it to the customers that it decides. Correct. To a certain extent, I feel that the Supreme Court has not brushed aside the control test which was being applied earlier. It still continues to be relevant. And we will definitely have to carry out a very thorough exercise, because it's a 3-judge bench judgment. Of course, the department will continue to rely upon it for the purposes of all the engagements under the GST regime. But at the end of the day, I feel that the control test still remains to be a very active principle, and we'll have to see all of the tests that have been opined in the judgment in conglomeration only. That is the effect.
I completely agree. I think the fact that the Indian company was required to provide certain set of services to the parent company, for providing that certain set of services, certain technical employees were sent to India on secondment basis, and the service fee was charged on the cost of those employees plus a 15% markup, weighed heavily in the mind of Supreme Court in the facts of this particular case to decide that this secondment arrangement was actually a service arrangement and therefore should be chargeable to service tax. Coming back to you, Saket, obviously one is how do we deal with this problem now under the GST laws, because as soon as this judgment came, we have seen practically various MNCs have initially they were received DGGI summons, and then I think some intervention happened at embassy level. After that, they have started receiving soft letters reminding the companies with respect to their liabilities to pay GST on the secondment arrangements. The fact that, as Lalitan said, that this judgment is a judgment on very peculiar facts. How do we deal with this issue of now GST authorities asking to pay GST on the reverse charge with respect to these? And assuming that this GST is paid on the reverse charge, whether we can take credit of of such texts which belong to last 5 year or not? That is one question, and then I'll come to the the service tax IRR related issues also maybe later. Yeah.
See, one is, as Lalitrendra also mentioned, there are various peculiar facts and circumstances you were also mentioning. One of the examples could be in a case where it's not a service entity. There is no cost recharges or cost plus entities happening. There are a lot of MNCs who have actually operations in the country.
Correct.
Okay. So, for example, a telecom company or automotive company, and there even CEOs, CFOs, CTOs, even the senior management are basically on deputation or on secondment into India. Now, whether those transactions where there is no service that I am rendering, but these are actually, the decision makers or, who are taking the decision for the country, for their employer, which is the Indian entity, whether this would also be brushed aside, probably the tax office will certainly take this view on this issue, but however, we can distinguish it, and it's only since it's a 3-judge decision, maybe at a later point in time we'll only get to know. Having said this, what do we do now? Now, insofar as GST is concerned, obviously there is a Supreme Court judgment and there is short litigation that is going to come on this issue. One option is you want to buy peace and you don't want unnecessary litigation, probably pay the tax and claim credit of it. Most of the taxpayers would be eligible to take credit. However, having said this, you could write a protest letter stating while we don't agree with this position, however, having, it's a revenue neutral situation for us, while we don't agree with this position, we are paying the tax so that we don't want unnecessary litigation, you take credit of it. Maybe it will be for a lot of SSCs where there is no credit accumulation, it will be a good ploy so that they at least don't have unnecessary litigation, tax, interest and penalty staring at them at 5-7 years down the line. Wherever it is not possible, then certainly you will have to take a position, maybe fight the legal battle insofar as GST is concerned.
Correct. Mr. Qureshi, while obviously these international transaction, obviously Supreme Court has the judgment. How does this impact the domestic companies having secondment inter se between the domestic companies? Should they be also wary of these transactions being treated as services going forward, or you believe that that is something which is not within the scope of what Supreme Court analyzed?
I think there is a clear provision for manpower supply. Correct. Under both the earlier service tax as well as the current GST.
Correct.
So, I think whether a secondment is manpower supply, I think if you look at most agreements, it actually comes out that way. I mean, you can draft the agreement in a particular way, but I guess as Alok said earlier, you'll have to see the business reality should not contradict what the agreement says. So, if the agreement indeed is in the nature of manpower supply, then I guess whether it is domestic or international, I think then we'll have to look at the provision very closely. Just one comment I wanted to make. I think the technical aspects have been debated threadbare, and I think the practical implication of this, which is now emerging, is that because this is a Supreme Court judgment, it is not a change of law. It is really retrospective. They have interpreted the existing law, and actually in certain cities, I think Sandeep, you also alluded to that, there are notices being issued asking for details of transactions in the last several years. So they may not have come to issuing show cause notices right now. Maybe that's the soft letters that you're talking about, but they are definitely asking for details of transactions of secondment agreements in terms of the Supreme Court judgment.
Correct. And as you rightly said, sir, they are right now asking the companies to voluntarily comply with the judgment and submit the data with respect to 2017 onwards. And that brings to my next question.
Let me add one thing with respect to this issue. Some very interesting provisions that exist under the GST regime are come from Schedule 1. Now, the problem is that when this judgment came out, everybody started referring to Columbia Asia. Yeah. Now, in respect of services, under Schedule 1 only, there is paragraph 4 which reads that import of services by a person from a related person or from any other establishment outside India in the course or furtherance of business is deemed to be a transaction of supply which is taxable under the GST. And this would have ramifications under the domestic secondment agreements also, because similar kind of provision is there under paragraph 2 also. So at the end of the day, I personally feel that under the GST regime, we have a rather difficult steps that we need to tread on, and this is one of the structural issues that I have with the GST. Now, under the excise and customs duty, it was very easy to monitor incoming and outgoing of goods. But with respect to service, what should be the criteria? Should it be the criteria of direct beneficiary, indirect beneficiary? Today, the department is trying to cover even indirect beneficiaries within the scope of beneficiaries, and saying that you ought to have received some kind of income or consideration from them, and that ought to have been made taxable. Now any activity that we carry out, for example, this session itself, anyone who is basically attending this session also ends up benefiting the companies that they are with, and that leads to an indirect benefit. So had we been related persons, would that transaction would have become taxable? A friendly advice given to a related person, would that also become taxable? The scope is very endless as far as the structure of Schedule 1 is concerned with respect to supply of services. That's one of the inherent issues that I feel is there with
on this, and I would like to say this is a very, very important legal issue, and in fact this is something which is being deliberated. Obviously the constitution gives power to the government to charge tax on income, on sale, on supply of service. But what is income? What is sale? What is supply of service is defined under the constitution to a very limited extent. In fact, income is not defined. Now, by way of a deeming fiction, you stretch that concept of sale or supply or income to an extent where you want to tax something which in no commercial reality would qualify as an income or supply or sale, is something which is before, in fact that is listed for our arguments on 13th before Delhi High Court, where this whole idea of extending the scope beyond commercial realities by way of deeming fiction is to be challenged. And I think that's what you're trying to say, that these deeming fictions are so problematic that they are removed from the far realities of the world, commercial world. Well, thank you so much, because Mr. Qureshi has to leave us in next 5, 7, 10 minutes. I have a few important questions for him, and I think we'll want to have the advantage of him being here and sharing his experience with us. Sir, moving on to the issue with respect to appellate tribunal, and I think that this is something which is very, very critical issue, and everybody would have faced this issue. It's been 5 years, 5.5 years now, and we have received show cause notices, orders have been passed, first appeals have been decided, but there is no tribunal in existence or in near vicinity. It's not that it is going to come soon. It looks like the issue is stuck. So one is, I think our audience would like to know what is the problem that we do not have appellate tribunal right now, and how is it impacting the industry?
I think this is something very surprising actually. We came out with a landmark legislation. All political parties came together, a GST council was formed. This was really a landmark legislation. But somehow we forgot to address the issue of dispute resolution. The GST tribunal, appellate tribunal was supposed to replace the CSTATs, was supposed to be that mechanism. Unfortunately, I think it has got stuck in courts, and I think currently it is pending in Supreme Court on who all can be members of the tribunal. And I think there is a lot of back and forth happening between the government and the court on that. I understand, I think the government is giving a push once again, trying to form this. But as you rightly said, Sandeep, even if they now resolve all their differences, with all the tribunals they have to form on an all India basis and finding members for that, as it is, there's a problem with finding tribunal members. I think it is going to take maybe several years to actually come up with a functional tribunal system. So what does the industry do? I think litigation is just piling up. Till now, most of the litigation has been on ITC, for example. Of course, intermediary has been one of the big litigations. But I think the real litigation will start in 2023 when all these audits start culminating. There are multiple audits going on as we speak. Once those audits start culminating into actual audit reports, that is where the real litigation will start. Because this is all at a state level. You cannot be rushing to High Court for each and everything. So I think that is something, maybe, I think while constituting the tribunals is definitely going to take time. I'm sure the government has its own challenges with the Supreme Court and members and everything. But maybe one thing which should be done really is, I think CBIC should step in, try to issue clarifications wherever possible, and try to minimize the litigation which is going to arise because of these audits. I think, for example, that location-wise trial balance is one such thing. I think wherever they are seeing that states are taking different views and things will snowball, I think maybe it is for the GST Council, the CBIC to really step in and try to douse the fire and make sure it does not become a huge litigative issue.
Right, sir. So also, if you see the constitution of the tribunal under GST laws, we have now been used to tax tribunals which had independent judicial members. Would it be substantially different, or are the role of tax tribunal, the way it is contemplated under the CST law, being formed by 3 of the revenue officials? Would you believe that the outcome or the effect of the tribunal would be much limited as it is in case of service tax or income tax laws?
Yeah, definitely. I think there will be a big dilution. I think the concept of tribunals, it is supposed to be an independent body. The way for example, the income tax tribunals are, these are supposed to be independent bodies because, see, the first level appeal is already part of the government. You can't also have a second level appeal, which really is just mirroring what the government is saying. So these have to be independent bodies. And that is, I think, one of the challenges, because the Supreme Court has a certain viewpoint on who all should be members of the tribunal. Now, to firstly agree on who can be members, secondly to identify so many independent judges, which anyway many tribunals, including the income tax tribunal, we are already facing that shortage. And the C-stats, for example, C-stats are virtually non-functional now because most members have retired. So I think that is definitely going to be a challenge. I think we will see more and more pressure coming on high courts. High courts are already clogged with all kinds of litigation. I think the GST in the last 5 years has just multiplied that. High courts anyway do not have the time to really look into factual issues, which is what most GST issues are. I think either they get into those issues. For example, intermediary, thankfully they are trying to get into the issue. But I think it is definitely a challenge for smaller taxpayers to approach High Court for each and everything.
Correct, sir. So on the option, yes, we understand the High Court is option. Is it a practical option that in the interim, the existing C-stats may be given the jurisdiction to decide at least some of the issues? Do you think that it would be a practical option which the government should consider?
Yeah, definitely. I think that is a very good suggestion. I think they have the knowledge, the expertise to look at indirect tax issues. But I think, as I said, there is a pressure on, even there we don't find too many members. For example, we know the Chandigarh tribunal has been non-existent for several years.
Right.
So I think, and maybe to your point, Sandeep, maybe it is easier to fill up those tribunals,
right,
than to set up GST appellate tribunals. They will anyway take 2-3 years. Maybe it is easier
existing
to find
infrastructure,
a few members and try to fill up these C-stats and at least try to push some of the high visibility issues there.
Correct, sir. Thank you, sir. Thank you so much. We understand, sir, that you have prior commitment and you will have to leave us, sir.